we go into mid-September, we're going to start seeing reports that are mixed, some good, some bad, and might be some surprises in there that are more negative than positive as we go forward. The other thing, there's a dynamic that's happened in the markets, having been around for a long time. When I started in 1979, the volume on the New York Stock Exchange was 40 million. And the other thing that's helped that happen, and it wasn't just Robinhood, but it's fractional shares.
Sure.
So my favorite line is, investing used to be for someone, now it's for everyone. You know,
but isn't that a good thing though? Because you have more liquidity.
It's a very good thing.
Yeah.
It's a very good thing. And you know, and the fractional shares is given access to markets. Hey, doing a quick test. Let me know if there's an echo. It should be fine. Welcome everyone to the Kendall Report. Should be no echo. Please let me know immediately. I'll pay attention tonight. Okay, good. Sorry about last night and the echo. That was just terrible. I never look at the timeline on the chat line while I'm going and presenting. So anyway, what a day today, huh? Plenty of volatility. I think it's interesting what's going on, folks. I think that everybody seems to want to jump on the Fed skip, not pause, but skip, right? And I'm sticking with this. Listen, they're going to raise rates again in September because they have to. The reason why they have to is because they already said it's not going to be in every other meeting thing. If they do that, they're going to lose face. And they listen. I'm one of the few people out there giving the Federal Reserve A+ on what they've done. I haven't been happy. Going back a year, I was on the troll farm with hitting on the Fed, but you know you have to look at what they've done. I mean, we got PPI coming out, right? We'll go through what happened today here in a second, but PPI is expected to be up 0.2 on both measures, core and headline. And then, you know, the year over year, we're talking two-handle, 2.3, 2.6. You know, that sounds like a pretty good deal. And I know that folks, let's go to what happened today when the CPI came out. We got the 0.2 increase, and there's all kinds of, everybody's making their decisions around these numbers. And I think the markets believe that maybe the Fed was going to skip for about, I don't know, maybe 2 hours, right? And then all of a sudden, we started seeing the selling coming in. In fact, I did a tweet right as we were coming right in. We had just hit that Fibonacci targets. If you remember last night, I talked to you about the 3 Fibonacci targets that were on the hourly chart. We traded just above that Fibonacci 1, and we were trading right toward the STX level. And it was very interesting. Now, I still use my TradeStation numbers, and just to clarify things, those of you on Twitter probably got confused because the numbers on TradingView are slightly different than the ones on TradeStation. I live on TradeStation most of the time. I've switched over and using TradingView because of our indicators, and because that's where I can get access to it. I can't get you access on TradeStation, so TradingView is the venue, and every night I present using the TradingView Indicators. So just so you know, I keep telling everybody is make sure that you check your emails. We're going to send an email out that if you were a previous buyer of the indicators, that you do get a very deep discount. I mean, you get these things for really cheap, only if you bought the previous version. So this is a loyalty discount. If you don't get it and it shows up and it's showing the wrong price, don't click buy, okay? Send us an email, but we're sending out a promotional code. We found one little error in a promotional code today at why it wasn't working in some cases. It worked about 95% of the time. So anyway, just make sure if you're getting those, you had the previous ones. Don't miss this discount. And there's a discount for everybody there as well. So don't miss that. I'm not sure the exact date. We're working on another platform, another program that we're going to be launching as well, that we're going to be exposing to all you folks. That it's going to be pretty exciting. So anyway, go to kendallreport.com/indicators and do that. So sorry, advertisement, but it's really important because there's this thing is going to go away. It's going to be more expensive, and I want you folks that have been part of our community to get these discounts. So let's go back to the CPI and all of those things. But the point of what's going on is this dialogue. I mean, the reaction to the markets. I'm not sure. I'm trying to put this together. Okay, I've been around a long time. I'm trying to figure out why the markets think it's so important, or the reaction act as if it is so important that we're getting that the Fed skip. I don't know what that's about. I guess, what is it? They're going to skip, not pause, and they're not going to lower still longer for, I'm joking forever, but it's going to be higher for a long time. We're not going to see any adjustments by the Fed. And they've even told us this. I hit a little short that was out on the marketplace. If you go to the channel, you can see the shorts, but one of them was why I was right about the Fed. And basically because I listened to what they said and believe them. They've actually done exactly what they said they're going to do. Powell made it fairly clear, I think, without saying it out loud, is that they're not going to be doing, the plan isn't every other meeting. I believe they will do it again in September. Why not? What's the difference, right? We went through that when they did skip that one time. Every other central bank just, went ahead and raised. So the Fed this time will raise, and guess what? Maybe the other guys skip. Okay, so there's a game going on here, folks, and this is how all the central banks are playing this out. So just know that that's going on. But it's amazing to me to watch how the markets are trading around this number, and there's just so much uncertainty. Is it a good thing, a bad thing that if they pause? I mean, that's not even clear on at least how the market's acting. And what we saw today was, move up into these resistance numbers. And in fact, if you have the two, I use the hourly chart as it's like the holy grail for me intraday. And I do plan, by the way, in coming up and doing a live stream and using the indicators during market hours tomorrow, probably about 1 o'clock Eastern time, for an hour or so. I'm not going to have a lot of time, but I do want to come up and do that. So make sure you mark your schedule for that. But this hourly chart, I mean, we went right to the 200-hour moving average and rejected off of there. It was perfect. I'll show you here in just a minute. It was absolutely a perfect rejection. It was a cluster of numbers again. You folks that have been around this channel for a while know I love clustered numbers, where we had, the RXT was coming in. We were R3 RXT levels. We had the 200-hour. We had the Fibonacci targets on the hourly. Everything was lining up perfectly. So, like I said, I'm confused what the market's looking at and why people are reacting like they are. But everybody, I watched a little bit of Bloomberg today. Every guest and every person on there. Well, they're going to pause now. They're going to skip, not pause, skip. And, it's just built in. It's just how it is. The Fed fund futures were wrong last time. They're probably going to be wrong this time, and pricing in no raise in September. And it's, so we'll see what happens. We got PPI tomorrow. And like I said, expectation is for it to be in a 2 handle, 2.6, 2.3 and 2.6, and that's headline and core. And so that's going to be interesting. Whether does it come in greater than 0.2 on both measures? We'll see. Markets the interpretation is what's interesting. And there was plenty of volatility. If you were a day trader today, it was heaven if you got this thing right. And you should have had it right if you had the indicators, because I'm going to show you on the hourly where these rejections were signaled. It was perfect from my standpoint. So I think as we come into the end of the week, we got a number of things. I'll show you the database. I did tweet out the database. If you follow me on Twitter, I'm at Portfolio Expert. There's no E in the expert, so it's Twitter/Portfolio X, just the X, no E in the expert, and you can follow me there. And I put that out, and I really think, like I said, that you've got to watch really closely some of these numbers intraday, and I'm going to set you up really good for the end of the week. And then we're going to go through the database. As you know, we're a day lagged. It actually starts right now, local time in Pacific time. It's just a little bit after 3, getting close to 3:30 in the afternoon. So the models and the database starts to run at about 45 minutes from now, and they'll finish. It takes about an hour to run all the stats on 15,500 plus symbols. And once all that's done and the portfolios are all updated, it generates the stats that I talk about. I'll try to get them out on Twitter if I can. But like I said, I'm going to go live around 1 o'clock tomorrow, so look for that. And we'll just looking at some of the indicators and some of the things like that from the standpoint of how to use these things intraday. They're just amazing. And I know I'm trying not, the last couple of times I did it, I got hung up on using this 5-second E-mini chart. And that thing is just absolutely insane. And I ran some algos on that today trading, and it was insane performance because of the volatility. So anyway, just looking at my notes here, looks like that's all I had. I mean, we were, the S&P at one stage was up 1.3%, and the NASDAQ was up 1.6%. We ended up 0.03, basically flat on the day. And then NASDAQ was up 0.12, and Russell was ended up underwater. But what a day. So let's go ahead and let's talk about the database. I'll set up for expectations. Those of you that are portfolio expert and both institutional retail users, I'll set you up for how we should be looking at the database right now, and then we'll get right into the technicals and finish it up. At least there's no echo tonight. So thank you again for your patience. Let's go ahead and get into the database. So here we are. We had 1,660 sell signals, 246 buys. So we are now at 35.48. I was setting this up for you last night, and I said, hey, we're probably heading towards 38, maybe 32%. We could see a 32 handle out of this when the models run here in just a few minutes. So it is likely that this could go below that 32. The numbers that I discussed with you last night, the next important numbers to look at is around 28%. 22 is drop dead. If we take out 22% bullish on the daily models, that is going to signal a full liquidation. That would suggest that we get something more drastic happening here. And I did put out a tweet earlier today talking about, since we are under here, that this 42%, that this does suggest that we're going to see more of a correctional phase. And I think it's been interesting, a couple of things that I've said, and I'll go through the details here on the technicals here in a minute. A couple of things I've been telling you about is that I thought that the 44.70, 44.50 level was probably the extreme. We'll reevaluate that expectation here in just a few minutes. But the database, if we start to punch through these 32, 28 numbers, it's likely to get much deeper in the correction. So let's go over to the weekly here for a second. And when we look at the weekly, we're still basically short in the tooth. We're at 76.43%. I've showed you a couple charts in the past that what we're looking at is, I'm going to bring this up today just to bring this into perspective here. This is typically how the database unfolds, and this graphic has everything to do with the intermediate. Okay, so the intermediate, we're right here. We're at 76%. Typically, what happens, the grayed out in the background is the actual percent bullish, and what will typically happen is that we'll start to see some attrition here, and the bullishness will start to fade, but the market still, it tends to have more look forward upside. Now, it doesn't have to be that way. And the way the technicals are set up on the weeklies, and on Sunday night, so this video is for Friday's activity. On Sunday, I'll set up next week, and we'll go through all of the details and what the look forward looks like after we see the database run. These numbers are incredibly important. Somebody I saw even on Twitter, or maybe on a comment on the channel last night, is what people are talking about is boy, Bob sure turned a little bearish. I tell you folks all the time, this database and this data is what is driving me. And we were at 80-some percentile bullish. And when that thing started to roll off, I started to tell you, hey, we should go to 68, 58. And then, of course, everything started to implode. And we were also, there's a number of thumbnails and videos that I did in the last week and a half or so that we're talking about market stalling. Everything was starting to look like this 46 handle was going to be something significant. And you could even go further back, and you could see several months ago, I was projecting the 46 handle on the upside, and we got there. And it almost seemed surreal that we actually were able to get to those levels. So from the standpoint of how the markets are configured, this is what we should start to see on the weekly. So it's very likely that we're going to see some backfilling on the weekly. We're going to see the bullish percent start to drop. 68's the next number. We're at 76. So we may just see 3 or 4% haircut on the bullishness. And as long as we stay around 62% plus, then there's not going to be any, I guess we'll say, real detrimental type of viewpoint from the standpoint of things deteriorating much further than they are. Let me get this. So we'll go back to the database here for a minute, but we're still looking at stuff. And if we look at the all stats, I just want to go through a little more detail here just for a minute. If we look at the all stats page, over on the right-hand side of the screen shows the expected returns, the expected holding periods. So it's a very unique from this models that I built many years ago and have been running for over 2 decades running this. And so that's why this has led me through a lot of markets all the way back to 1998. And the first models and the first instance of this platform was built in 1996. That's getting to be almost 30 years ago. But the point is that what we're seeing here is we have expectations. So on a large scale, looking at things on a database level, we have a typical expected optimized returns of about 39 days of holding period. And as I talked to you about, this is the weekly. So if we go over to optimized weekly, it's 204 days on a holding period. So let's take a look. The current duration filled right now is 0.35, and we're looking at average duration of 61 days. We'll call it 61 days of 67 days of 204. And typically we don't get all the way to the 204. We'll get into maybe 170 days plus, and then we start to see some sort of rotation. So it'll be interesting because as some of the trades actually kick out, if we do see what I'm expecting here, that what we'll start to see is that the rotation will begin, and then there's a potential for a refresh. And I think all of this stuff, what it's taking us to, folks, is that we're going to be in this corrective phase potentially into the second or third week of September. October will be, as we come into the fourth quarter, might look a little different. We just have to see it. I think it's somewhat ridiculous to get too far ahead and start predicting what year end is looking. It always makes me crazy that a lot of these financial journalists will ask somebody, well, what do you see the market at year end? Who cares? Okay, you're not going to be able to figure that out. Okay, but what you can figure out is exactly what is likely to occur as you walk forward your analysis, and that's what I do every day. I hope you folks that are learning from also being around this channel. But my analogy I always talk about is sort of like driving at night with no moon, and you have your headlights on bright. And so you're always looking for the corner because you don't want to go off the cliff, right? So the same way with investing, you always want to just be looking out for any type of issues, and that's why we do look out and say what is likely to happen from the standpoint. And I use these statistics to actually guide me through that type of thought process. But the whole point of everything I do, folks, is it's all about probabilities. It's all about building these expectations and building the trust in whatever it is that you do. And this, to be honest with you, this is why I put out the indicators. I want you folks to have these things. I mean, they're not a subscription base. I'm selling them for, in my opinion, next to nothing for all the years and analysis that we have put into this whole package of stuff. And the new world of AI has actually helped a lot as well. So, but the whole point of the database is for that look forward map that I just showed you. Okay, so let's go ahead and let's go into the S&P here. All right, I'm going to have to. Okay, here we go. This is daily. Let's go to the hourly, and I'm hoping I can show you some of this crazy volatility. And by the way, also, let me bring this up. We also got an RTX sell signal the first hour this morning. Got this monster move up right after the open. We printed right. So here's the Fibonacci numbers I showed you last night. The yellow, cyan, and red lines, right? So that number, this was before we were trading over here last night, yesterday. This is 3 o'clock yesterday. The market was at the 4508 level. The fib targets were at 4532. We printed 38. I think this was the high. Actually printed as high as 44 on that spike. So we went right up to, I think that was right at the daily R3. We'll look at that in a minute on the daily charts. But if you can see also on this bar where I have, let me draw this in because this if you've got these indicators, you need to watch for this. And it's just been the last several days. This has just been really, really, really good. Let me show you here. So right here where this peak is, I could run the script and show you, but that is right where that RTX sell signal came in, where that blue bar is, closed above the market grid, and then we got this downward move right here. And what was interesting, if you're looking at this, each hour we were seeing a deterioration. So there was about 3 to 4 hours of downside action that was starting to indicate that we're going to see these declines. And it was interesting. Somebody on Twitter, I was kind of busy, I couldn't answer, but asked the question, could we go into the red? And obviously we did. And so I want to show you something else that's happening here. We've got PPI coming out in the morning. Look what is on, this is the hourly. We have new projections for the market to rally back again. So what are those numbers? Let me, I've got to cancel this out just so you can see this real quick. But hang on. So what it looks like, we've got a bottom coming in. I have to close this tools because it won't let me show values. But this move here looks like, I'm just guessing, is putting us into a potential rally, and we should get above these averages. And I'll let me close this out so I can give you the exact values here on what's going on. So from the standpoint here, we've got probably a couple more hours down, and then we get the reversal. Here we are. I'm just trying to get the number. So right here is kind of a lull where we should get up into these values, and then this is right at London Open. That's midnight Pacific time, and then we'll 3 a.m. in New York. And so then looks like we should get kind of a strength into the opening tomorrow. So we'll see if this plays out, but we should start to ride above these moving averages. You can see the algos are just flatlined here. And a lot of that would happen is this big, I talked about this last night, that we're going to get this, what I call a volatility bubble. We had one here, we have one here. We're going to get yet another one tomorrow. And it takes somewhere between 12 and 20 bars, in this case being an hourly chart. It's going to take 12 to 20 trading hours to normalize this chart again and get into where we see a contraction here. Let me just bring up the drawing tool again just to point this stuff out. So where I'm talking about is this a volatility bubble here. Here's one. We should get another one tomorrow, maybe into these fib targets, probably get another range here. And then these algos are probably right here as we look forward, and we're looking at, maybe getting in a sideways band. Let me in a sideways band over here where we're just going to kind of flatline. This is pretty far out. This is into Sunday, Monday over here, but we should see something that maybe looks like this, and then it looks like it wants to hover, and then ultimately maybe late tomorrow sell off into the close. We'll see. I'll be live tomorrow at 10 o'clock, so we can update this in real time as we get there. But that's kind of what the algos looking forward are telling us is likely to happen. Doesn't mean it will, but it's interesting that we got these fib targets again. So let me just close this tool out. And those fib targets, high target 45.40, 45.65, 45.81. That's the red line up here. So 45.40 is a retest of yesterday's high. That would be interesting, especially if we get some crazy volatility again, just like what we've seen on Thursday's action. So watch out for that. All right, let's go to the daily finally. As I mentioned last night, we've got probably one more day, maybe even into Monday, some further weakness, angle of attack. We're getting projected crossovers on the 10-period moving average, and that typically, a lot of folks look at those crosses as a negative. I look at it as a positive, and especially if we get back and we close above the 10-period moving average, then what you do is you start up the bottoming pattern. You can see going forward, at least from the algos, for what it's worth at the moment, these are projecting that we're going to see higher prices as we come into mid to late September. That's at the moment, that's what the forecast is. And it does look like, to me, from a pattern standpoint, that we're likely to consolidate. And the weekly charts, which I will update on Sunday, we'll go through more detail on that on Sunday. But this looks like a reasonable expectation. There could be some further downside if you just look at the market grid for Friday. So we've got a projection of some pretty crazy numbers. So let's look at yesterday. We did trade up. So 45.38, that's the number that I put out on Twitter. That was the RTX yesterday. We rejected right off that number. Not only was that there, but if you look here, the daily 10-period moving average was 45.40. And it was, if you look at the PPM, we were at minus 0.25, which was trend mode. Told you there was less than a 30% probability for the market to trade and close above that value of 45.40, which was the 10. Now it's still declining. If we look at today, now it's 45.29. So it's going down, 11 handles per day. So that 29 number is going to be a number to watch today, because we still have a pretty decent, like I said, 0.25 number, and it's being projected to even go down a little bit more, almost to 0.30 on Monday. So there's still going to be that angle of attack. That downward angle is going to suggest that 10-period moving average is going to be one of the key levels to watch. That's going to be your resistance point. It's going to be tough with these kind of numbers to get above it. You look down here at PPM 2, it's still accelerating down. PPM 3 is also accelerating down. Let me just put up here the PPM 200 real quick. So we even have the PPM 200. This is the green line down below here. I want to change this to a different color just so you can see it easier. Is what we're looking at here is the 200 is way down here, but the 200 is breaking down, and the 200 is still positive, but it has broken its first second derivative. Doesn't necessarily mean that we'll end up going down to there. That's 4150. That's a pretty big number. But we'll go through a deeper analysis on Sunday night. But let's just take a look at the market grid here. And market grid S1 4470 and R2 4517, R3 4533. That's likely to line up with some of those numbers that, like I just said, 4529 is the 10. So maybe you could print up to 33. We're looking at hourly charts suggesting that we've got fib targets on the upside. We got a major report coming out tomorrow, going to generate lots of volatility. And those of you that have even been in a live room or the old live streams I used to do, I always talk about the spike trade. And the spike trade was there this morning, where you sell the big higher spike. We went from 45.32-ish all the way down to 44.97. I think it was, maybe even a 94 print, just in like 3 minutes time. It was insane. And you just kind of have to aim, point, and shoot. And if you get those trades off, there's a quick scalp. It usually 2 minutes. Some people think it's fairly risky. Been doing that since my floor trading days back in the 90s. It's just always been a pretty good. You don't trade size, you trade small, but it's almost always a really quick in and out trade if you're a day trader. But like I said, the patterns that are unfolding here look like there's still some downside. We're likely to see, when the run comes out tonight, further deterioration of the short-term database. We're going to see some deterioration of the weekly database. So a lot of things are starting to correct, and it just depends on whether it gets enough traction that the intermediate trends start to be questioned. At the moment, they're still pretty good. Sunday night, I'll go through that stuff, and we'll be basically just about mid-month. So we'll call it a mid-month update on Sunday. All right, so we'll go to NASDAQ next. Still get that angle of attack. NASDAQ hit, take a look here. This is daily. NASDAQ RXT 15,420. The high was, get the right number here, 15,442. So pretty much right on the mark. Rejection got down. There also is there's Fibonacci targets in this pattern, and these are usually going to be hit. We've already hit Fib target 2, and that Fib target 2 is 15,116, low 15,136, pretty close. And then the extreme is 14,980. That's certainly a possibility. And like I said, the NASDAQ looks like it's trying to lead the way a little bit on PPM1, but PPM2 and the downward pressure here is still building on this trend from the standpoint of before we're going to see a bottom. So the 10 period moving average at that right now, which is 15,439, will be very stiff resistance. Look for rejections around those numbers. And then if we could trade through that, you've got a couple numbers to watch out for. You got the 40, 15,418, and then you also have the 21 as an extreme. Right now is 15,583. So this pattern looks like we're going to start as we come into next week. It looks like we're going to improve a little bit. And guess who's going to lead the way again? It looks like the NASDAQ will lead the way from that standpoint. I don't think there's any reason to go through the weekly, so let's just spin forward and let's go to the Russell. All right, so Russell is still looking weaker again. We're trading right at the 40. This is the daily 40-day moving average. All the PPMs are accelerating to the downside. The algos are suggesting that it's going to get a little bit worse as we go for forever. So yeah, I see somebody talking about September buy. It's probably what we're looking at. It's not that there won't be some tradable runs on the upside, but this is when this pattern will most likely be completed. And the same thing here. You know, you're looking into September, but we should see next week. We should see some sort of rebound, maybe a rebound up to the 21 period moving average on the NASDAQ, on all of these. We could run back into the key resistance levels as a rebound rally, then maybe consolidation, retest of the lows. We're going to have to see if the lows that we printed this week are valid sometime, probably next week. That's most likely going to be what we're going to see. And then from there, then maybe we can start to talk about bottoming patterns, but I think it's going to be choppy. The best scenario, if there's going to be higher markets as we come into year end in the Q4, which is still out for, I guess, validation. If that's going to happen, then we're going to have to consolidate this thing pretty much into that I think there was numbers, I'll pick them up on Sunday night when we go through this, but it was basically looking into about the third week of September when things were at least expecting and looking like they could start to show some signs of a bottoming or some kind of extreme. So we've got a lot to go. The good news is from all of you that are portfolio expert or WaveTech users, you should see on any of the short-term stuff, you should see some cash being raised. But on the intermediate, I suspect most portfolios will stay fairly invested during this period of time. It would take a further breakdown after this maybe 4 to 6 week consolidation before you can see any liquidation or any further issues, I think, with the portfolios from that standpoint. The only thing that could, I guess, if we had some kind of major disaster of some sort, then maybe we could get some selling further sooner. But I don't expect that. Patterns aren't set up that way, and typically, like I showed you, the intermediate database is only about 0.35, about a third of the way through its normal cycle. So there's a fair amount of look forward here yet, but it could thin out on who the players are. And, I always say this, the whole concept that there's 7 or 8 stocks driving this market is just total BS. You could have had, I forget the home builders, there's even one of the mortgage companies is up like 90% this year. And while every video on YouTube is telling you about the real estate crash, a bunch of amateur real estate people out there just absolutely calling for this crash and all this stuff. Well, it's not happening. Like I said, you could have made 100% putting the top 10 home builders in a WaveTech portfolio. You'd be up almost 110%. And you didn't have to do any more than put them in there and let the models tell you what to do. But the bottom line is, it looks like the Russell will once again be the weakest of the clan, and the S&P second, and then of course NASDAQ looks like it wants to try to at least try a bit of a rally mid-next week. So there's not going to be a straight line. We should rally just once again back in towards some of the key resistance levels on the S&P and NASDAQ, probably back toward the 21-day moving average, but that's even going to take several days to get to that level. So interesting, I left my notepad at home. I went home midday for a few minutes and left it there, did some work and then left it there. But the auction today, the 30-year auction, was, we're seeing a continued increase here. You can see that the 10-year back at 407 here. And like I've been talking about, we're just in the sideways range, but we went all the way up and we did close above RTX today. So we're probably likely to flatten out here. This is the daily chart, and there is a fib target up here that's still live. Let me show you. There's fib targets right now at bear with me, so the fib target, high target 1 is 415, 430, 440. I've talked about these numbers. This was an interesting move today. And what's starting to happen is what I showed you on the yield curve analysis I did last week, where we're starting to see the front end flatten out and the back end started moving. The 30s, the 10s are going to be starting to increase in yield a fair amount, and I think that's going to be interesting. Just about if you turn on any of these channels, every advisory firm out there is telling their customers to buy these long bonds, that they're going to be cheaper and they're a great bargain right now. Yikes. I think that's a bad idea. And they're talking about we can get 4.1, 4.3% for 30 years. Yeah, I don't know about that. I would be a little cautious with that trade, and it's just so concentrated. I mean, the advisor types that get a bunch of play, and maybe they have a little larger advisory firms are getting on TV, and they're all saying the same thing. So you just got to know, folks, that's probably not going to be the trade to work. Maybe if you can scare them out, there might be a trade there. Even my good buddy Hugh Hendry, he's underwater on TLT so bad it hurts. It's got to hurt. So, I mean, it's like, why do you want to own that stuff? I mean, what are you thinking? And this is one last thing, just while we're looking at interest rates here. A bunch of folks are coming back out with their recession because they're buying these bonds. They're buying these bonds. This is the only thing they've got, is they need a recession to be right on this trade. And I think even if there's a flattening out of the economy, it's not going to help them. There's something else going on. And this is what I told you and have been telling you about for a while here, is what's going to be important in watching the treasuries is the refinancing of after the debt ceiling crud that we went through. And basically Treasury tapped out. They had like 2 days before they ran out of money. When they replenished it, they went on the short end, $600 billion. Now they're restructuring. That's why you're seeing these auctions coming out, and they're trying to get more stable financing in place and trying to freeze this stuff out at 4%, because I think that's going to look cheap someday. I think there's potentially a lot higher yields coming down the road. So don't think that. I guess it's just not possible that these people are going to be right. And everybody, listen, I've been around a long time. Everybody talks their book, right? There's nobody around that doesn't talk their book. If you own something, I used to when I was on the trading floor, I used to talk about the folks that would run around, and I called them promoters. They'd be promoting their position. So, hey, you own so and so, and like, no, I don't own it. Why are you talking about it? Because you own it. You're trying to find more buyers, But that's one of the things that what all of these folks, everybody's doing it, and I'm telling you, folks, it's the easiest. You could be a really good analyst. All you have to do is watch about 15 minutes a day of CNBC and Bloomberg, and you can find out exactly what not to do. It's very simple. And, it's laughable, especially the people that they come on. I'd like to address one issue, but I'll leave it alone. But I'll just tell you that there just seems to be more and more amateurs coming out than I've ever seen in my life. And okay, I got to stop. I'll get myself in trouble here. So I won't go down that rant any further. But the bottom line is, if you look here and we're at the daily treasuries, it looks like we have an increase. So it looks like we may get even higher yields. Tomorrow's PPI, folks. So maybe they're going to sell these off one more time. You're going to see, these bonds start to get hit again. And so tomorrow's going to be an interesting day. Remember, 10 o'clock live stream. I'll be live, and we'll do some indicator stuff. All right, so let's go. I want to click over to the weekly for a second here, because this is important. This is just because of where we are in time. I want to spend a few more minutes here with these interest rates. But I've been talking about this angle of attack and the slope on these 10-year. I mean, look at this. It just keeps it's going to climb this into, guess where? Second, third week of September. Then they're going to stabilize. So this may be enough to keep the markets in correction. Maybe the correction, maybe there's deeper numbers. I mentioned and probably come up on longer term analysis, a 43, mid 43 handle on the S&P is possible. There's a lot of things that are coming into focus now. And for the most part, like I said, on our short-term basis, that's why I've been getting more and more cautious over the last couple of weeks, because everything is starting to, starting to get a slight roll here. Yeah, so if I said 10 o'clock, I meant 10 o'clock Pacific time and 1 o'clock Eastern. I see some chatter going on there, so let me clarify that. Sorry. You're dealing with my dyslexia shows up once in a while. All right, so let's go ahead and let's go back. Let's put up the, and I know I've been rattling on about this, but this is why when I did the yield curve analysis last week, as I was looking at the 2-year is flattening down and on the back end is going down. We're looking at the 10-year. I went back and forth last night, but the 10-year is sloping up. And so that just means that curve is going to start to normalize. It's probably going to be not inverted, but flat. The next phase that we'll see is a flat, maybe even at some stage that the front end will maybe drop off a little bit. But I think the Fed funds 13-week, maybe 6-month T-bills are going to stay in the 5 handle, and then the middle part, the 5s, 10s, and the 30s will start to move up closer into 430, 450, I think, and possibly higher. I don't know that they get into 5 handle, but it's certainly possible. As long as these jokers keep coming on CNBC and Bloomberg and keep talking about buying the long bond, they got to get punished. There's no way that trade's going to work. All right, I think I'm done with that. Sorry. All right, so crude oil next. We're off a little bit. We're starting to get at peak levels here on crude. I've been talking about this $85 level, and that's pretty important. We printed 84.89. This is a weekly chart so far this week. We actually printed up into the high fib target number, which right now is, let me just bring that up real quick. 82.58, 85.28 is the actual fib target numbers. If we did get above that 85.28 number, then I would argue that we're 89, maybe 94 would be a peak value. But it does look like we're getting very close. Even though the PPMs are rolling over here or forecasted to roll over, that doesn't mean the market's going down. In this case, we're looking at 1.46 ppm value is the projected value just going out, 1.77 just going out to next week. So that is an extreme upward angle of attack. I showed you folks the map for the probability map. We're right at where we get into an extended pattern, 1.4 to 1.6 on this indicator tells you that you're going to get an extension, meaning it's going to go further than you think it's going. Just know that it's going to keep going. And we've had right now, if we go back 7 weeks, we probably get 8 weeks, maybe 8 weeks up, and then maybe 3 to 5 sideways, and then we'll find out if there's any more. But it looks to me that this is just going to stabilize up here. I don't think we get this big blast up unless these idiots in the administration decide to fill the SPR at this level. Wouldn't put them past them. Maybe if you can panic them, that would happen. Let's look at the daily. Daily is starting to fade a little bit, so that's another reason here. I think we're getting a little frothy. We're above fib target 1. Back on the 24th of July, we got fib targets, and those numbers are 84.10, 88.03, and 90.45. We printed up into the fib target 1 at the 84 plus number, and then these are still valid numbers here. So we're looking at the potential of 87. The same numbers. The weekly numbers are, I think, more significant. But if we do get above 85, like I said, look for a surge here, and I would suspect what's the best way to put it? The Saudis, the OPEC folks are going to be threatening even more. They may not do anything, but they're going to threaten doing more cuts, and that's going to be a thing. And I see somebody mention DXY. Thank you for that, Dexter. I appreciate that, because I told you that I should cover the dollar, and I will actually do that next. Okay, appreciate it. I'm so glad you put that on there, and I caught it on the screen. So thanks for doing that. So let's go ahead and take a look at the dollar, because I think that's worthy addition for tonight's stream. All right, so this is the daily dollar. I remember back in July when I was telling you this thing was going to rally. We're coming up to the 200. The 200's down, but I want you to look at the indicator on the very bottom, the PPM 200, and this is forecasting that the 200 is going to start to flatten out. Does it get to 0? Yeah, it's forecasting out a little ways that this is rounding off and going to go to 0, which means that it will be likely to be penetrated. So let's just go over to the weekly, because I think that's the better analysis to look at. So we got 3 Fibonacci targets in here right now. Let me make this so you can see it. So the 3 targets are for 103.48, 104.98, 105.90, and we're not really getting a confirmation on the intermediate for a breakout. It looks like the PPMs are flat on this 40, right where the 40-week moving average is where fib target 1 is. So if we look at that 40, it's 103.24, and that target's 103.48. So we could see that easily. It doesn't look like we're going to break out, but if we do print up there, I think that's probably going to be around the peak. But most likely what you want to watch for here is, especially if you have the indicators, make sure that you watch this market grid on the weekly. We should start to consolidate it, but you can see something here very clearly, that the forecast, the WTAR forecasts, and these moving average forecasts are showing that we still got a downtrend coming up and heading back toward these lower fib targets. It was interesting. We got almost a direct hit here on the fib targets that came out. There were fib targets on the downside that came out on Monday the 26th, and those numbers were for a move down to 99.60, and we got to 99.57.8, and we bounced right off of there. The next week it was 99.58. It was double bottom right there, and we rocketed right off. So that fib target 1 was the perfect level, and if you were looking at some stability, the PPM started to turn up, but it doesn't look like we're going to get breakouts over first, second derivative on these indicators here, on any of them. it looks like we're going to see a lot of resistance. So the Dow should start to peak out, and I'm going to go through the gold next, and it's going to tie together with some of the things that we're seeing in gold. So let's go ahead and do that. All right, so here's weekly gold. PPM1 says turning up, stabilize next week. The key would, I think, to be, and it doesn't look promising at the moment, we have the 1944 is last. I talked about some of these numbers around 1929, 1925 should be extreme on the downside. That's about where this fib target is here. 1921 is that yellow dots that you see in the pattern, and that is really, that should be the bottom. It's also right on the 40 period moving average, which is 1915, and that number is rising. Let me give you a number here. That number is rising about 7 per week, so that's going to be right at that 1921, right into those levels right there. So that's going to be where we should stabilize. The other thing to watch for, I think we'd have to close well above 1950 to get the market grid to turn up, but it could stabilize here. And if it does turn up, then that will set up what I call basically a squeeze, a volatility squeeze, where we start to see the market grid start to contract quite a bit over the next couple of weeks. This is a weekly chart we're looking at. So just know we're pretty close to bottom. I don't see anything going there. And maybe if the Dow starts to bottom out, then we'll start to move up. And that's really what the forecast is telling us on PPM1. All right, so this is weekly Bitcoin. We're continuing to hover right around that 10 period moving average. Right now, that number is 29,162. Last trade, 29,422. The range has been very narrow, and this is that volatility squeeze that we're seeing here, where you see the market grid getting tighter and tighter. So it really is setting up some sort of breakout. And the algos are suggesting slight upward pressure coming, and we should stay above that 10 period moving average right now, which is 29,162 on a closing basis. This is weekly. We should see it continue to stay above that level. Next week, let me just see what we got going here. 1 second here. Yeah, we're rising right now at about $250 per week. So that 19,162 is going to be about 19, we'll call it 300, 350 range is going to be your support levels on Bitcoin. We should continue to climb. It looks actually that the algos are suggesting a stable run. You can see the projection of the moving averages into the future, that they're suggesting a slight bias to the upside, nothing drastic. We still have these fib targets up here that are lurking, and those are fib target 1 is 36,222, 46,602, and 43,308. And I know a lot of folks were talking about, we get the ETF running, we're going to see this big run to the upside. We'll see what happens here, but I think that it's going to be a steady flow here at the moment. Okay, folks, that is going to do it for this week. Hard to believe another week's gone by. Sorry about the disruption earlier in the week. Life happens, as they say. And next week, there's potentially some disruptions. I'll just let you know as things go on. I've got a family member dealing with some health issues that we have to tend to. So anyway, be patient, be good, be safe, have a good, profitable day tomorrow. Thanks again for watching. Hit the like button, subscribe, all that. Matter of fact, we went over 33,900. So there's something with the channel going on, but make sure you tell your friends. Let's get a bunch of people over here and build up this community. We got some cool stuff ahead for you. And I'm working on putting together, as I mentioned, I noticed so only those mad dogs and Englishmen that are hanging around at the end of the stream will know this if you make it this far, is I am working on doing some sort of virtual presentation, educational type thing that I'm looking to put together. We were talking about it earlier today. I mentioned it last night. I'll let you know. And I still want to do a Vegas meeting. I think that would be the best place for us all to meet. So maybe it's pretty hot out here right now. We're printing. I was in Phoenix the other day. It was 108. I think they're 111 today or something ridiculous. So, just Vegas is very similar. It's about temperature's about the same. So maybe we'll figure out a date. If nothing else, maybe early spring if it happens. But I still think that's going to be the easiest place for us to meet. Anyway, folks, thanks. Have a good day trading tomorrow. Watch that volatility. Watch for that spike trade that I always talk about. And it should be a lot of fun. And we'll see you on Sunday night. Thanks for watching. Yes, 1 p.m. Eastern live tomorrow, about an hour or so.